I am Stephen Davis, Senior Market Strategist, RJO Futures. It's Friday, January 29th, here to talk to you about the grain markets, the agricultural markets, corn market. We'll start with that. We get in here early here in Chicago. Markets are open, global markets, and there was a 1 3/4 cent range in the corn this morning from low to high. So it seems we're really lulling ourselves to sleep here in some slower and quieter trading ranges. So demand is the key, and certainly exports on corn is something that everybody's looking at, and we can certainly look to see some improvement there. That would be a good development. So soybean market, a little bit of volatility here in the air in the last 48 hours. Let's start with yesterday. We're down 14 cents. What happened? Well, at 8 a.m. Central Standard Time, the USDA came out with cancellations of U.S. soybeans to China, and then fund selling, and we go sharply lower. 14 cents lower. Now today we're right back up 10 cents today. So a little bit of volatility in the air for the soybean market. South America, it is August now over in Brazil. So Mato Grosso, the big soybean growing area in Brazil, it's just like similar time period of August where the soybeans in the next 30, 40, 50 days will pollinate. So we need normal rainfall and no intense heat in Brazil. And it seems like we're going along in that fashion. It's not going to be a record-breaking crop, but there's no calamities either. So look like a good crop coming out of South America and Brazil specifically. The last 2 years, the rallies in soybeans have been 60 to 80 cents in the summertime. And the rallies in corn have been 55 to 75 cents. But we're really, again, lulling ourselves to sleep. I can remember back in the day when the limit on soybeans were 70 cents, and we went 70 cents lower one day. Now that's a whole move for a summertime looking forward. So I just, again, typically something's going to happen. I don't know when, but something is going to happen sometime. We're going to keep talking about some type of catalyst that's going to change this outlook. There was a beige book out on Tuesday. We all know about the beige book. It comes out from the Federal Reserve, the different districts of our country. Well, there's also a Creighton University Main Street Rural Index. So kind of interesting, the 12 states that make up the Midwest, the rural agricultural states of our great country. And two things U.S. farmers want and are looking forward to is a lower U.S. dollar and the TPP being passed, Trans-Pacific Partnership. And we talked about that last week a little bit. If Congress can pass this TPP, it would be a boom for U.S. agriculture. And tariffs would be lowered from these Pacific countries, and they would be buying more U.S. grain and more U.S. soybeans for us. So that's what the U.S. farmer wants, and let's hope Congress can give it to them. Just a side note, I wouldn't bet against the U.S. farmer. These guys get it done. You guys get it done no matter what calamities you face. And I'm very, very impressed with the U.S. farmer and how they get it done. So looking forward, nobody's touting the return of commodities here. And I love taking the other side of trades that nobody's talking about. And nobody's talking about commodities and rallying back. And so we're going to keep talking about some of these events. And maybe it's going to be weather here mid-April. We're still a few months away from that when we get planning here in our great country in North America. But typically something usually happens. Everyone have a great weekend. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.